alignment and collaboration across the homeownership ecosystem. Would you take a minute to respond to the question, where have you seen alignment work and where does it break down? And as you respond, please also share your name, your organization, and the perspective that you're bringing to the conversation today.
My name is Naji, Rashid. I'm the team leader, social broker with Rashid Group at Sampson Properties. I've been in Asia for 30 years. My primary focus in real estate is I work with mostly first-time home buyers. Really enjoy the process and helping them to achieve ownership. Where I see alignment working in the industry is that we're all very good at handing off to each other. The client when we first meet, we're very good at that because we have relationships with each other, so it makes it easy to do that. I believe that where it falls apart is once we receive the client and we start the process, everyone goes back into their respective corner and works on what's mostly important for them. To give you an example, me as a real estate agent, when I am trying to help a client to purchase a property, I'm looking at the market and what's going on in the market. So that means that if I need to get a buyer in within the shortest amount of time, 30 to 40 days, that's what I need to do. But timing might not work for the lender that way, especially if the lender is using programs and things like that, which might require 60 days. So because of that, that's where we don't stay aligned anymore because each program focuses on the area that is most important for them. Everyone is doing their job, but we have to figure out a way that we can make it work where we all can still get our jobs done, but makes it best for the client because they're the ones that get confused in the process because they're getting told different things from the different folks that is in the industry.
Thank you, Naji. Just a reminder, hold the mic as close as you can so that we can hear you.
Chloe Williams, Director of Housing Counseling Program at Druid Heights, CBC. And for housing counseling, where we have seen it align and work well is with the real estate agents as well as with the lender.
I need to maybe raise your voice.
Okay,
You're
with the
still
lender.
soft spoken.
Okay. And so with the lender working together, because we will communicate handoff, as Naji mentioned, with the client, and then asking them perhaps, well, what do you see as an obstacle as well? What have you found? Maybe you're looking at the pre-approval, pre-qualification, and how we can work together to help them reach the goal. So we've done that successfully with a lot of lenders, so that's been a good connection for us. Where we've seen a challenge sometimes is when they come from the real estate agent to us, right, for that first step. Sometimes it's with the attitude of, let me just check this box, get my certificate so I can get the grant and go. It's not always with the idea of really learning something that's going to help them sustain home ownership. And so we find that there's some disengagement with that.
My name is Sonia, Eaddy, and I am coming from the perspective of being a resident of Baltimore, 3-4 generation resident, also an advocate for the community. What I see with convergence and the alignment, all of this right now is new for community. And I've seen that there have been challenges of getting to know how to become a homeowner, not having the resources that Baltimore City once had. So that loss of resources, people not being able to be directed, to the process. So being a part of the Southwest neighborhoods, we have like the Southwest Partnership, for example. We now have Life Bridge and the different resources that are now coming to the neighborhood that we see something positive in the way of neighbors, people who live here, and now go to these resources and access the knowledge, you know, that they didn't have, and which I believe helped Baltimore to become blighted, you know, in the way that it is viewed today.
Hi, my name is Pamela Martin. I'm with M&T Bank. I have been in the mortgage industry for 25 years. Don't count that age. But I have gone through so many experiences and everything. I'm a Community Reinvestment Act loan officer, meaning that I deal with the services of the community, of first-time home buyers who are low to moderate income families. I found this to be my purpose. I enjoy working with the community. I enjoy working with nonprofit organizations. And really, I can write a book of stories that I've gone through over the years, helping those first-time home buyers and in the community with the low to moderate income. Alignment, I think alignment, we should deal with everyone. Everyone should be involved. The counselors, the nonprofit organizations, the realtors, the lenders, the customers, not just rushing to get them to closing. You know, everyone should be aligned together and be involved. So with this whole process, alignment is being involved with everyone. The breakdown that I see is that there may be miscommunication to borrowers, where if it doesn't work, it's just them not expecting or, you know, arriving with those expectations with the homeowners. So try to arrive at an expectation, let them know, communicate in the beginning, delays of the processing, let them know everything in the beginning, and then you will have a smoother process.
To our first stage of homeownership, which is where people are deciding that homeownership is for them, right? So let's continue to think about those patterns and the roles that you've already brought up. But starting with outreach and trust, where does outreach reach people well, and where does it miss them?
Trust is really hard to gain when you talk about home ownership. And that's because, you know, most people just, you know, they go through life and they have issues. So it's not easy to gain trust. I see it on my end, and I know the lender sees it on their end. With outreach, I think that we need to factor in everyone's situation. So what I mean by that is, you have folks that are very, you know, everything is digital today, so electronic and all that. But unfortunately, there are communities, people that are not on that level. They're just not there yet. So, you know, we still need to find ways to connect with them and help them to be able to become a homeowner. Especially even seniors. There are many seniors that I deal with that, you know, when you talk about outreach and build a trust with them, and you want to force them to use technology, and they're just not there to be able to do it. So we need to continue to reach out to people and touch them in every way, and not just leave them, you know what I mean, on the side and try to force everyone, you know, to do the same.
With that, social media, of course, is a good outreach, but sometimes this is about for some of our other, you know, folks who are not technology, you know, savvy or just not into it. Grandchildren may be helping them, so there are some ways to do that. So with housing counseling and our community organizations, the door-to-door, door knocking, right, the old school, really reaching out and trying to reach them in the community. We've been trying to do that just to reestablish that trust. I heard Ms. Sonia say sometimes we don't even know as community residents what's being offered and what's out there. So bridging that gap with the communication and really our community meetings, or again, going door to door and meeting them maybe at the barbershop, wherever they are, so that we could reach them and educate them on what's available.
For me, seeing outreach, there is not enough outreach in the community. I'm the president of my community association, and knowledge does not come to me. Our neighborhoods are very active, you know, in our community associations. And it seems to be that the city will bring information after they've created a plan. So you're only coming to share with us your vision or your plan. And so the community, there's a lack of trust because we've been made promises, things that we've asked for never came, and so it's a struggle as a community leader to even get community members engaged because they feel like nobody cares, they're gonna do what they wanna do anyway, and so when I bring these issues to whoever it is that's bringing development or how we're gonna rebuild our neighborhoods, it's always a thing of when I say I need more engagement with you all. It's like, oh, there's a cost, how much flyers cost, but we have to assume that cost, when we go out, going back to the grassroots, like you indicated, door knocking, then it's a problem. They don't have enough staff. It's all these excuses that we continually hear within our neighborhoods, but yet, when they're ready to move forward, you're moving forward without us. Our voices aren't heard. We're not feeling as though we're being respected, as if we don't matter here anymore. And so this is where I see outreach is necessary, and the only way that I can see that you're going to be able to build that trust, people need to see it. You need to come into the neighborhood. They want to be heard and understand that I live here, I chose to live here. I choose to remain here. And if you're going to do anything here in my community, I want to be able to have the opportunity to talk with you.
Before we keep going on this issue of trust, which I'm seeing, we're on a roll, who is being missed? Seniors, I heard, your community, who is it that you're thinking of?
Mostly the homeowners, the people who are vested in the community. Are the ones who really need the help. And because, they have children now who are grown, or grandchildren who are grown. And there are plenty of vacant houses in our neighborhood. People who want to remain in their community. But there's no opportunities for us to bring people in, and let them know, I would like to live here, I would like to purchase this home. I want to live near my aging parent, and so these are some of the people who I see, who needs to be, and it seems to me that a lot of the focus are not on the residents who live there. It's more, or the owners who are really vested. It's more of talking to the renters, but not giving the renters the information to be able to be a homeowner. And so they put us against the odds of one another. And the renters feel as though, we don't care about them because they don't get renters here, but we want them to know that you're a part of our community. And anything that comes here is for the benefit of all of us. But when you don't feel as though you are included in that process, then you don't get them at the table. So on the outside, you hear more opposition, than you feel both here than you.
Thank you for lifting up homeowners as a missed opportunity to leverage them as the anchors in their neighborhoods. They are. So I'm going to keep going on that idea of trust. Ms. Pamela, do you have any thoughts?
So trust is basically our actions also. So we want to build that relationship on our actions and then let them know that we are committed. And we have to stick to that trust and commitment to let them know. So being committed and involving your actions and letting them know, that we're sticking to this, then I think that will help develop the trust. As far as outreach, with the outreach process, we want to stay involved. All kinds of ways we can stay involved. And we usually assume that, I see the problem where we usually assume that everyone processes the same information the same way. And that's not good. everyone's on different levels and different perspectives on how they receive the information. So we have to make it clear and understand different levels of different people, just like the different characters of the person. So how we receive and process the information is not all distributed the same way. So we have to stay on accord and try to understand with those persons to process that information in the correct way and make sure that they understand.
And I just want to ground this in where we are in the journey, right? So we're in this first stage before people have decided homeownership is for them. Where's the opportunity for alignment between your goals here around trust?
Because I was thinking, what Sonia mentioned, that we could get in early as housing counselors, right? So maybe not once they even think about buying a home, but what if we're talking to them earlier, reaching them at the community meeting, like you mentioned, a summer camp or a financial course with the children, but now we also have the parents and the grandparents that are now hearing these ideas about home ownership and renting. And so finding ways maybe to get connected with them early in the process and start to let them know what's available and what goals they can reach when it comes to housing, whether it's renter or home ownership.
I think it has to be consistent. We have to consistently, reach out and be there. You can't just go in the community once and say, hey, would you like to purchase a home? Let me show you how to do this. You have to consistently be there and helping them during your time. And that's how you build trust. It takes time to build trust. It doesn't happen overnight, and that's what folks are looking for. When they see you come in the community once, and then you leave, they don't take you serious. You really want to have an impact. You need to have a schedule and be there for them, and show them, and then get them more involved. And then eventually, they'll start believing that you really have their best interests at heart. You really want to help them become home.
Say something else. Also, a lot of the first-time home buyers will come to me and, I'll explain the process of pre-approval and things like that. But one thing that arises with the confidence is, I said, I'll hold your hand through every step of the way. And that relaxes them and makes them understand, okay, no matter what, you can ask me anything if you don't understand, no questions dumb, but I will hold your hand through the whole process.
Sonia, you spoke to me about not wanting to assume that people are interested in homeownership, that they understand the value of that. Can you say a little bit about that?
Yeah, and talking to some of my neighbors and some of the young people, I've learned that because we seem to be in Baltimore City, the whole thing now is ownership, home ownership. And I look back to my past and I really thought that people owned their homes, and then, they lived there for decades, and so that house was even passed down to the next generation, but they didn't own it, and so talking to some of the younger people, and people are not wanting to be homeowners because they don't want that responsibility. They looking at, I don't want to cut no grass, I don't want to make this, let the landlord take care of that. If something breaks, I don't have to fix it. I'm not a handyman, don't have the finances, for the repairs, so they're not interested in becoming a homeowner. I think that's something that should be and needs to be addressed. And I know we're going to come back to it further down the road, but I'm hoping that, as a part of the process from the banks, that we look at, you're purchasing this house now. You have a 30-year mortgage, over 30 years' time, there's going to be some situations in the house. And the bank should take, more of a look in knowing this is a reality. Things can break. Things need to be updated, to keep the value of the property. And I think being able to assure people that, if they're paying their mortgages, that there should be some type of a loan, something that can come back to them you know, when that need comes, where you won't have those foreclosures. You know, people wouldn't have to walk away, you know, from that. So I just think that there are some things, some type of initiatives that should be given. This way you assure people, yeah, I can take that road of home ownership. It's way cheaper than paying the rent, you know, so.
Thank you. Before we move on to the next stage, I just want to name some themes that I heard. Right, I heard that we have to take a step back before we think about the transaction, right? And put ourselves in the minds of the folks that are being left out of that conversation of homeownership. And then I also heard that, you know, there are folks that are on the ground, housing counselors, community associations, and that partnerships with the different roles in the space can be a critical way to reach them. Which is, I want to be a homeowner, you know, I'm going to find an agent, I'm going to find a lender, you know, this is the part everybody's here for. So where is it that most first-time home buyers get stuck, from your perspective?
They're very scared, okay? So, from the very beginning, and I'm here to experience, I will work on helping, you know, communicate with a first-time home buyer, helping them to say, look, the first thing we need to do is we need to get you set up with counseling. You need to get pre-qualified to see where you are. They will talk to me, but then once I start handing them off, they back up. And then I have to call them and say, hey, what's going on? We were very excited about doing this. They're just scared. They're scared that they're going to be turned down, that it's not going to work. They're not going to get approved. They're going to be embarrassed. And we have to assure them that we're there with them to help them no matter what their situation is. No matter if they can buy now or if it's going to be a couple of years from now. And that's what I try to help them to understand with the process. That, hey, look, it doesn't have to be today, but we're going to be here with you whenever you're able to do this.
Fear is definitely a huge one, and when they come to housing counseling, we also the credit is a challenge. That's where sometimes they get stuck because the answer may have been no, and so housing counselors are there, right, to help them work through those credit challenges, but getting them to that point and keeping them motivated. So housing counselors are trying, you know, that's their goal, to keep them on that action plan, working toward those steps that they need to overcome the obstacles, and so that's what we're trying to work through. But again, partnering to keep them engaged through that process, because sometimes it takes a little while. So that's what we've done.
Tell me about that partnership. What does that look like? Who are you thinking of?
So mostly, and it involves all of us really, because the agents are waiting in the wings, aren't they ready yet, you know, things like that. But also, I found working with the lender, right? So because maybe this lender only needed them to take care of these 2 things, whereas lender B needed them to do 4 things. So communicating with the lender, I found is super helpful. What do they need? Since they've already, you know, contacted them, they're working with them, so now let me find out what do they need to reach a yes from you, and now the housing counselor and the lender can work together to make that happen. We give it back to them, they're ready, now let's move forward. So that's how we've been working, and it's been working so far.
So yes, I'm so great that you, I'm so happy that you mentioned the lender, because I just want to get to my part. So yes, the pre-approval process, yes. A lot of them drop off because then they hear about the expenses, out-of-pocket expenses that they need to save for a down payment, different things with the cost. But, and then also, like you mentioned, credit, you know. Just to let you know, I never turn down the customer saying that you're denied or use those type of words. No, I said, oh, so let's see what we can do about credit, you know. Once we get this done and get this fixed, then you take the next steps and do this, or how to work on the credit, or what to get rid of, or what should be in your credit report. How should you save for emergency funds? You know, I sometimes tell the customer, you know, each time you get paid, even if it's just $20, just go ahead and throw it in the bank and say, this is for my house. Put that $20 in the bank and then let it marinate and just act like it's not there. And just use it as something that you, as a goal to say, okay, I'm gonna try the first steps to try to purchase my home. I know I need to save up some money, so let me just open up this bank account or just have my savings account, and each pay period, even if it's just $5, you know, before you know it, you have a nice set amount of emergency funds. You have some money for your down payment, some money for your closing costs, and I let them know that you know, this is just a start, and this is where you can begin with everything. Now, we do have those organizations, nonprofit organizations and grants to help them with down payment, closing cost assistance, but I always tell them, always have a backup plan. These programs are here to assist you, but you still need to have your own funds and to save up and to be, you know, secure. So just in case things don't come through, you have those funds in the bank. So just take your time. I tell you, work on with your credit, what needs to be done, the credit cards below 30%, or if you need to even open up some credit, open up a secure credit card. So there's steps that they can take to start their home buying process, and don't get discouraged and say, no, I don't want to do this.
Before we keep going on the sort of the technical aspects and process, I want to invite Sonia. Her daughter just went through the process of becoming a homeowner. What is it like from your side of this experience? And I assume you didn't have a team of star players like you have with
So, looking at my daughter wanting to move out on her own, I took her to look at rentals, you know, and I wanted her to see how much house she was going to get for this price, giving this away, you're never going to own it, you know, and when we got out there, she got a realtor, you know, the realtor took us to look at different rentals. And in her price range, her budget, you know, it was neighborhoods that she did not desire, houses that had just, minor, like slaps of paint, you know, no real renovations or anything, old cabinets, you know, and so she got to see, you know, what was out there on a rental, you know, and then looking at, okay, now let's see what you will qualify for, you know, as an owner. And so now we are looking at houses on the market, you know, for sale. She got to see the difference because everything that she liked on the rental was out of her budget. You know, and so now she's able to look at houses that are in the conditions and neighborhoods that she preferred in the right price range. It's a mortgage that she could afford. You know, but because me and my husband are into real estate, you know, we were able to assist her in a way, you know, but and also teaching her the value of home ownership, you know, but she had to take the course, you know, and I talked to her this morning, she's just trying to, you know, her head, like, what were the benefits, the problems, you know, some of the things that she didn't qualify for, some of the funding, you know, so those are things that people are told, oh, you can get $20,000 and you can get $40,000, you can get $10,000, but you have to qualify for certain things, and you don't know these things going in. So having this counseling, you know, we need more of that counseling, you know, home ownership counseling. And the lenders. You know, I love what she was saying, and when I was saying earlier about having that money, I mean, we pay car insurance, and now we have the car insurance out now for maintenance insurance. You know, I think this is something that the bank should consider, a way of when you bring them to the table, you know, and it's not, at this time, you're just able to just throw some money, you're already in the process of your purchasing process. You know, so you are able to get this information now out soon, that it's something that the banks can offer, you know, that you have this money, you can get instead of just a savings or a checking account, a homeownership account, you know, that you can start putting younger when you're not ready to start the purchasing process. But you can start investing in the future of a home.
I think that's wonderful, right? Because it kind of connects with what we were saying. We see with the lender, even at going back to the building of trust, if they hear you say to them exactly what their housing counselor has said to them now, okay, I'm hearing that same message, right? It's building that confidence, it's building the trust. And then like what Sonia said, we need more of the housing counseling because how many of us is there, you know, how many agencies do we have? What's the capacity for the counselors that are there? So all of that, the funding, where is it coming from? So all of that discussion like needs to happen so that we can keep going with this work.
Let's talk about the subsidy programs or the assistance programs for a minute since you brought that up. Where is that helping and where is it falling short that you're seeing?
It's definitely helping. As Ms. Sonia mentioned, sometimes they are not eligible, right, depending on the income that they have in the household and things of that nature. But it has been invaluable just with the different programs and helping folks not only get in, but sometimes there's additional funding that they can put toward the principal, and now it's making that original loan, right, more affordable. So it's been great as far as the subsidy and the incentives. Sometimes, of course, they run out of money, and like Ms. Pamela mentioned, we have to encourage them up front. You gotta have skin in the game, start saving your money, because sometimes the funds run out, and we need to be prepared for those unexpected costs. But the incentives are there, and for the most part, they're working as long as they're available.
Thank you. So, yes, I see the subsidies work very, very well. I deal with the subsidies every day. It's how I structure the loan. And then I see where they work where we can stack those subsidies, which works very, very well. And it really helps them out because, say for instance, if the purchase, we were pre-proving them and the purchase price is a little bit above their level, and you know they're going to get the subsidies and everything else, and use it as a backup thing, as you know, being approved for those subsidies. So if the purchase price is higher, maybe a little bit higher or out of their range, the subsidies come into play where they can put a larger down payment, and that would make things a little bit more affordable. It makes the payments a little bit lower. So I see it's a win-win with the subsidies. But always have a backup plan if some of those subsidies don't come through and they run out of funds.
I want to acknowledge that we have made a fatal flaw in recruiting this panel. You guys are the cream of the crop. Clearly the system is working as you're in it, but where are the opportunities to create better alignment across your roles that you're seeing?
I think the communication is the best way. Upfront expectations, like there's a lot of guidelines. Okay, you have to let us know 2 weeks before closing or when the closing date is, when they're supposed to do this next, what's the next step. So aligning the steps in the process, I think that communication needs to be upfront. And so you know what to expect and when in order to be successful at it.
I have a solution for that. Okay. I think that we should create a portal in the housing counselor, the lender, the realtor. Everyone is uploading information in the portal along with the client. Everyone is to see what's going on. We all know what's happening, and we can make sure we're all on the same page. They do that with title work. Title work, we order it, most of them, there's a portal they send you, they send the client, they keep all the information in there. I think if we could come together and do something like that, we'll keep everything together and it'll be very beneficial for the client.
But I do want to say that there is a portal.
Yes.
And that's where I've gone through an experience where the housing counselor would set up the portal. First, once they get their contract and their home, then I contacted the housing counselor that did their counseling, first-time home buyers. And then they have to go in, like the city of Baltimore, to set up the portal first. And then they pass it along to the lender to do the lender portion. So we're in communication, and I let the counselor know, hey, she has a contract in the home. These are the monthly payments. These are the grants that she's going to be getting that we're looking for her to approve. So it is set up in, in all across the board with a portal. But that's where I see the communication between the housing counselor and the lender.
Yeah.
And then
I'm
after
talking
that,
about all.
you mean everybody?
I mean
Okay.
all, even the client. I
Even
think
the client,
that
yes.
everyone is engaged in that. The client benefits more because they see what everyone is. The client
It's to see what everyone is saying and all the information all at one time. Like I said, we do very good at passing stuff off to each other or working together as teams sometimes, but we lose it once the client is not engaged in that process.
So the portal needs to have transparency to all the actors, including the client.
Yes.
And the name of this magical portal, let's handle that.
I think she's talking about neighborly.
Yes.
Neighborly portal.
Neighborly.
Neighborly,
Okay.
which is what we use for the city incentives. But there is also a portal being worked on, what you're talking about, you're at the end. Talk about it there.
Okay, that's good, that's good, that's
Yeah,
good.
I do know of one portal that they do send an email to the home buyer also. That was the neighborly portal too.
Okay.
They do kind of involve a little bit, but not everything, but just to keep them intact where things are.
Right. Well, we'll get together at a bar after this, and you guys can watch this. I want to move this. I want to keep us going and move us on to the last stage.
Because sometimes
Yeah.
the lenders, right, if they come from other areas outside of Baltimore, sometimes they're not always familiar. So that's
Right.
one area too that we found is a breakdown.
Familiar with the
With Baltimore
programs?
City, with the programs,
Yes.
exactly. So that has been a challenge.
Which is, you closed on the home, maybe recently or 50 years ago, and now you're looking to make sure that you can maintain the house and benefit from the house long term. What supports should exist after closing that don't currently exist right now?
Well, I think Ms. Pam brought up, and Ms. Sonia brought up one of the ideas that we had, that we thought was missing as well in that post-purchase process, was that account, whether it's a savings account, a matched account, because you're always looking for that carrot. The grants get them to the table to purchase, right? But keeping them to sustainability, whether it's from property taxes or if they fall upon a hardship, right? We have, of course, those loss mitigation tools that the housing counselor can help them navigate through. But if there was an account that they had been saving in homeownership counseling, we of course encourage that account being started for home maintenance early on, right? But if you dollars aside per case of that. But again, sometimes we run into those larger situations, repair programs are needed, but they may not exist. Or am I eligible to access them? We run into that. So perhaps that account that could help with that hardship that comes along.
Yes, I think that also should be continued education and counseling also after they purchase. Also like in repair, maintenance, that needs to be upgraded and dated. Even right before closing, we see if there's home warranties available, that the realtor can provide the home warranties. So if the appliances break down and everything. And then going back to emergency funds. Emergency funds to just in case if they don't have a warranty for that appliance or get things fixed, or know how to check the electric box, or know how to check the water heater. They have some type of education on maintenance, on how to, who to call and what to do if the situation happens. So yes, they do need, that's one thing I feel that they do need to have some continued education. And if they fall behind because of a bill and don't know what to do or where to go, learning at the beginning of budgeting and what to do and where to go and to complete that process so you don't fall behind, that counseling will help out. So continued education and counseling after they purchase a home.
So just looking back at my daughter's situation, I'm glad that you brought those things up as well. A couple of months in, she ran into a plumbing issue, sewage backing up. Major cost because the city came out, it's on her side. And so, not even knowing about those type of things, and so, trying to navigate that. And also, her property taxes. When her property taxes were calculated with her mortgage, then 2 years later or a year later, it went up. So it's like, why now? Because she purchased something that was in her budget. And now you're having to pay like $400 more. So where's that extra $400 going to come from? So you're saying having resources, being able to come back, so people can explain, to these people on, what's happening here, how can, maybe y'all could help her, or help that person, to navigate that, because they don't know the system yet. They don't know, even with paying your property taxes, it's inside of your insurance, in your mortgage payment, but even sometimes learning how to maybe take it out and have a private, mortgage company so that you can decrease, that mortgage for paying it separately, because you'll have more coverage, with your insurance. I just think that there is not enough information after you done signed your name on the line, and it should be at least give them support for at least a year, to help them navigate it, at least a year.
Yes, I wanted to explain on that. So yes, I have experience where customers, they would purchase a home where it was vacant, it was renovated, and the seller had lower taxes. So at the time of processing and getting that loan, it did show, and that's where you need to communicate, and lenders need to communicate with the title companies. I worked with one title company where the agent said, okay, well, these taxes are going to go up after this purchase. So it's good to give that expectation to the customer and see how high the taxes are going to go. And I usually tell the borrower that, the only thing that usually can go up is either your homeowner's insurance, and this is before the purchase, homeowner's insurance or your taxes. So you want to try to base your pre-approval based on what they can afford if it goes up. There's a lot of technology out there and things that we can find out now where even with the AI, I'm finding out ahead of time what it could possibly go to, which helps out a whole lot. And if you distribute that information to the buyer and let them know ahead of time, then they won't be in this predicament. So that education comes into play again as far as, okay, these taxes are going to be reassessed after 3 years, payment will go up to about this amount. Can they afford this? Is this something they can do? And then there's also at the closing table, they mentioned about the homestead tax credit. So you get that at least 30 or 60 days after they close, you fill out the application. They take a while for you to get back to you, but that will be established. And you have to do that once you change your license, your deed has been recorded, then you go into the home tax credit. So that's another place that can help them also when the taxes are changed and everything.
I want to circle back to the idea of the incentives not being aligned. So, Chloe, your point was that the homeowner needs the incentive to come back and financial incentives are the best. What about the incentives for the realtor or the mortgage loan officer, other folks at the table to come back during this stage?
To help out after?
Yeah, how do we give them incentives? How do we give you all incentives to stick around?
Well, I think that, first of all, I do stick around with my clients. I do, honestly. What we do is, first of all, twice a year we send them out a checklist too, and this is something we do to help them with their home, because when I go, it really hurts. My wife is here too. She's been an agent for 25 years, so we've helped a lot of first-time homeowners. And what really hurts us the most is when we go back to the client's home to help them sell the property, the condition of the property. And that's because they really never learn how to maintain the property from the beginning. So they just living there, you know, you have a termite inspection when you first purchase a property, it's 15 years later, you have not had one since then, and now the house got termites everywhere, you know. So it's things like that that we try to send out information and make them, hey, look, these are things we can't force anyone to do anything, but we try to help them and understand, to change the mindset. Because you realize most first-time home buyers are coming from renting, so they're used to the landlord doing everything for them. So unless it's, they don't do routine maintenance. So unless it's broke, they don't deal with it. They don't go around in the spring and check the windows and everything and make sure, you know, things, they don't need to be caulked and the grading doesn't need to be upgraded, all those type of things. So we need to find ways to put a lot of emphasis on it and help them to make it become true ownership, you know, and I think that's where we're lacking at on that end. That's a good question about how do we get the agents and the lenders to stay involved, because we all really do. I do know, and I don't do it all the time, but I try to reach out to my clients at least 30 days after they settle, and sometimes even after that, but we really need to stay more engaged with them after they settle.
And going back to that post-purchase program that a lot of housing counseling agencies have to help with that, but sometimes the funding is not there. A lot of times the funding is focused on the pre-purchase side, but not necessarily on the post-purchase side. So that again, just with that funding for the counselors, because the structure is there, but we don't always have the funding or the capacity to continue with that type of program. Bringing in the stakeholders from that, who are benefiting from them, still staying in the home, right? And so that could be a way to get everybody to the table and help develop those.
We're approaching time, so I do want to wrap this up, but I want to name a theme that I've been hearing, which is education is needed for the professionals too, right? We've been focusing on the clients, the consumers, but you all are the best, but there's a long line of folks behind you, right, that can learn from that, and I'm hearing that education across your roles is critical to making sure that this data matters. So I'll give you one more chance to weigh in and reflect. And before we move it over to the audience, what does success look like for Convergence? If your roles were to collaborate, partner, the way that you all are every day, but across the ecosystem, what does that look like for communities?
I thought about the increase in homeownership. You know, a successful neighborhood, I see has a higher percentage of homeownership versus rentals. I looked at what happened in my community. Poppleton, just the makeup of Poppleton. We have a lot of public housing in the community. And then there was a strong home ownership in the community. There was an opportunity that the city gave to renters who used to live in the high-rises, the Lexington and Terrace high-rising projects. When they demolished the projects and they bought housing, they bought an opportunity for home ownership as well as affordable rentals. That home ownership was affordable housing, you know, and so that was a benefit to the community. And then I'm gonna say that around 2020, when the city, you know, started looking at their urban renewal plans, you know, what they identified in certain neighborhoods is blight. And like, how do we eradicate the blight in these neighborhoods? And rather coming in and protecting the buildings that were in these neighborhoods, it was easy to demolish, you know, and with the demolitioning of the homes that were home-owned or family rented, we lost like 150 homeowners. But to bring back rentership versus home ownership, the people who were displaced were homeowners. you know, and so we learned that bringing in the high density of rentalship, our property values were lowered. And when we called to find out about that, it was our properties was assessed according to now the rentals that brings and turning our neighborhood to a transient neighborhood. You know, so being able to make that affordability, you know, making renters feel as though they are part of the community, you know, being able to have these things. Also, I learned that when we were fighting against apartment rentals, I don't want to take a lot of time here, because they living in these apartments and they have to pay to park. Instead of paying that $150, you're going to park in public, you know, in the neighborhoods. And so it became a challenge for our neighbors, not being able to park within their blocks. We have to walk 2 blocks, and most of these are aging residents, you know. And so now these residents will now have to pay their permitted parking. You know, so all these years you bought your house, and now you have to pay, you know, to park. You know, and so these are some of the challenges, you know, that I see. And also not having home ownership. When there was a liquor store trying to open up, you know, we didn't have enough homeowners to fight, you know, within that parameter. You know, we had to go outside of it, and by law you couldn't. You know, so not having enough homeowners to protect your neighborhood. So this is where I see the value of home ownership. You know, there are things, even amenities, you know, different types of businesses will come to a neighborhood when they see that, you know, you have this home ownership, that the people that are vested there. You know, so having this convergence, you know, and bringing this information and knowledge, because people don't understand where they live at. You know, you chose to live here, but you don't see the value of living here. You know, you don't see, I mean, we look at equity, and sometimes it's location, you know, and we don't recognize that, you know, the location of value. And other people trying to move in, when we took them through tours with Baltimore, through our neighborhoods, they was like, they didn't want to be a part of it, but they didn't see the value that, yeah, it's blighted, the city done tore everything out, got all these vacant lots, you know, but you had some vacant properties, but you can buy that house right now on the market for $5,000, $10,000, under $50,000, and you can convert that property into whatever you want that property to be, and live in some prime real estate. You're right downtown, you know, but because of what they see, they don't see the opportunities, they don't see the value, you know, and so the city takes advantage of that, you know, and then come in and build whatever they want to build. But, so I just wanted to say that we really need, especially in talking about the poorer Black and brown neighborhoods, we really need to have this investment. And I'm talking investment, I'm talking about the knowledge, you know, because people, we want to see how can we retain Baltimore's legacy renters. You know, they don't want to leave, but they don't have the knowledge of how to stay. So we want to be able to bring that knowledge to them so that they can get in the process. We get in it early because we have a lot of investors, outside investors, who see the opportunity of low cost housing, you know, and then, but they're putting the rents unaffordable even for a renter. You know, when they put them on the markets, that's unreachable for the people who live here. Can't afford a $400,000 house. You can't afford a $300,000 house if you're paying under $1,000 for rent. You know, and so I'm just saying that it's important right now, you know, for us, because there is a need to rebuild Baltimore. And so there is a need for this convergence. There is a need for the University of Maryland, all these institutions, to invest. They're putting investments in themselves in our neighborhoods. We need them to partner with you all, to help bring the investments back into the communities that they have come to be a part of.
Thank you, Sonia. I just want to acknowledge the long backstory in the Poppleton neighborhood, right? But what I'm hearing from the audience is that it's about power, community power, and also about community stabilization. Convergence and homeownership can be a critical part of that.
Okay, so I just wanted to say, piggyback on that, as success, everyone should work, no one should work alone as an organization. Everyone should be involved. There should be access to resources, like investors investing in their community where they're building new homes and everything. They should make that resource or access to that resource to that people living there, so they're not displaced, so that they understand that they can become their homeowner in their own community also. They're renting, then I think it should be acknowledged to have these resources relate to the renters that are living in that community first, and then give them the opportunity to have access in order to try to become a homeowner in their own community. I just feel that that would be a success for them, and I know you said like things with the parking and now they don't have this. There should be resources for us to come together for us to help that situation out, not to run into that type of problem. So success is just everyone staying communicated and not working as one organization, continue before and after the process of homeownership and helping those devastated communities also.
I believe that the more we do this, the more all of us get together on a consistent basis. I believe that we can figure out the blind spots and we can really help the communities in what they need. It just takes us being consistent with it. Not only the more we start meeting with groups like this, having these fishbowl discussions and seeing where there's help that's needed, the more that we can help the community.
And for us, that success, I think, would also just look sustainability, especially for the organizations and coming up with a model that supports that. So of course, everybody's involved, but that sustainability, especially for organizations who are depending on funding in order to keep going.
I wanted to just address this from the lender's perspective. Living here and looking at how Baltimore has just started to rebuild itself with homeownership. And I'm just going to use Reservoir Hill for an example. Family owned back in Reservoir Hill back in the 50s, right? Died. Family lost the house because they didn't know about property taxes. But looking at a lot of the young people who had inherited their family homes and stuff up there, even though a lot of them had jobs, when Live Baltimore City, I don't know who, I know Live Baltimore did a tour through, and then they also offered different incentives. They was giving out loans like $50,000, $75,000, and that you had to live in the house for like 10 years, and then it was a forgivable loan, and so to look at that transition, of Reservoir Hill, where when it was all black over the last 2 decades, it is now a mixed population. The diversity is there, but the opportunity to those who live there and had inherited their family homes were offered like I'll give you, people saying, I buy houses, come offering them, this money for their homes, $50,000, they haven't had $50,000, they don't never had $50,000 in their life. It's like a lot of money they're not gonna go to, but another lighted neighborhood. But I'm looking at the banks know the value since the new people have moved in. And if you know that someone owns one of these properties in Reservoir Hill, not giving them an opportunity to be able to get a loan so that they can do the repairs and whatnot to bring their houses up to par, to have that same value and be able to stay in their houses. So I'm just looking at this is something that I see as a problem and that I'm looking at, for me, it's always been the banks. Because if you foreclose, the bank take the house. These people foreclose, they come and get a $50,000 loan, right? If they foreclose on that loan, that mortgage or that loan, you're gonna get a property that's now has the value maybe of a $200,000 in equity in that property. And it's gonna sell like this. So I just don't understand where we talked about this a little bit earlier about credit. This is like being able to get that type of information out to people who live in these neighborhoods, and so that they can have these type of investments. They already own the house, but being able to get that equity, and being able to live in it, getting that money to be able to invest in themselves is what I'm looking at. How do we learn how to invest in ourselves? So I think that this is some information, that could be given to people who already own and how they can increase the value in the neighborhood.
Thank you so much.